Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the stock market wrap-up part 1. We will have a part 2 that follows this, going over the longs and shorts. However, I don't know if I'm going to do it right now or if we're going to go out to eat and do it later. But either way, at least here comes a part 1. I did not make a video yesterday because we were out on a boat having a nice little fishing trip. I decided to go ahead and do all my other subscriber work but pass on the videos. But I will make sure we do videos tonight and tomorrow or Saturday or Sunday for Monday. No matter what, we're going to be back on a regular schedule now. Anyway, let's go and look at the New York Stock Exchange first. There is one bad thing about this downtrend right now. And it will show it starting, I guess, right here. Whenever, after February 9th, we try to retake the 50-day moving average on the New York Stock Exchange. The very next day, we fell 4.84% on very strong volume on February 10th. That started the downtrend that we're currently in. And since then, you can see if we get up close here, looking at the volume bars in the middle window here, you can see that we attempted to have a accumulation day there, but it was only up 0.07%, so that doesn't count. Next, we have a sell-off on lower volume, but then it starts to get interesting. Now we have a real distribution day, down 5%, very heavy volume. Then we kind of have a go-nowhere day, but we're down over 0.25%. Volume is smaller, so it's still a pretty bad day, but not that bad with lower volume. Still above average, and above average means that institutions were at least going to work. And then we fall down 0.88% on higher volume. That's another distribution day. That's now 3 in 1, 2, 3, 4, 5, 6 days. That's never good. The very next day, another distribution day, making it 4 in 7 days. So the New York Stock Exchange fell 1.6% on huge volume. The next day, another huge loss, 3.55%, volume above average. Who cares that it was even lower than the day before? Just the fact that it was that heavy and actually higher than the previous 3 days before the day before is just bad in itself. And then, of course, you had the bounce where I believe some commentators were calling a potential bottom, and I will remind everybody that the put call was only 0.91 yesterday, nowhere near the 1.6 seen in March 2008. And as you can see from March 2008, we are only down 45% from where I'm at now, but as we go along, we're actually down. Let me go all the way now. We're down 51% since March, since the put-call ratio was 1.6. And even though we're down 50% since then, fear has subsided. And we've actually never gone over 1.5 since then. So there's still no fear out there. And if you don't want to believe me, then we'll go to today, where we have another. Let's just go and just go further. Sorry, we weren't there yet. So we had the bounce everybody thought was the bottom on the 24th. Then, of course, the next day, down 1.42%. Volume's lower, but not good headway. Then down again. So overall, those 2 days almost ruined the up day. Then you had a distribution day, down 2% on February 27th. Then you had another huge down day. Once again, volume is lower, but so far above average and down 5.55%, that feels like a distribution day. The very next day, lower volume, but on March the 3rd, we got red bop. Now, that can either mean two things. We're either near a low, or we're going to bounce, or it's about ready to get real ugly. So it can actually mean three things, to be honest with you. So BOP doesn't really work with the indexes is the whole point. So it's something to not really take into charge whenever, or take into account whenever you're looking at your charts. It's really just not that important. Then the next day, it was up, and once again, more commentators calling a potential bottom. Now, sorry, I was a little off my date. This is the time when it was 0.91 to yesterday. 0.91 put call is much lower than 1.6, which tells me, how can anybody be fearful? And then to confirm that, I need to go check the VIX volatility indicator. It's only at 47.56. Do you remember in October when intraday it hit, let's see, that shows 90, but I thought it almost hit 100. But I guess not. I guess it got up there to 90. So it hit 89.53 as the high in October. So we should be around 89.53 if we are near a bottom to have about the same amount of fear in the market. Nope, 47. So no fear. So we sold off today, and the VIX was only up 5% to 50. That's nowhere near 89%. And as you can see with the New York Stock Exchange, we were down heavy, down 4.42%. So now I want to go back to October and show you how far we're down since the highs. 58%, 58.5%, so we're almost down 60% since the stock market topped. and you could have been at least in cash by using the 50-day moving average, 200-day moving average cross in January 2008, and you never would have been long since then, and at least would have avoided 51% of the 59% downtrend. So just something to consider about using that 200-day moving average. Now today we had some good longs for us that actually went up and did very well, and all of our longs that did not go up actually held right in there. We are also short 53 stocks, which I thought I would never be short that many stocks, and that just shows you how horrible this market is. And 49 of the 53 were down, making us money. So once again, not only are the shorts making us money, but our longs are making us money, and that just feels really great. And I know a lot of people are hurting right now, but if you want to stop hurting, honestly, all I can tell you is subscribe. I don't know what else to say at this point anymore, but everybody should be in cash by now because I've warned everybody about cash for 6 months. And if you want to make money, I'm going to post tonight on the free commentary how much our shorts are up and show you that you can make money even in a nasty market. So there's some people that need to stop listening to the news and need to start listening to their charts, as the charts always have the better and final answer. Now, I'm going to go ahead and just really quickly look at the other indexes. The NASDAQ looks just as ugly. Also, I want to notice something. Look at all of the big, tall red bars above the 50-day moving average. Now, the volume average, excuse me. Now, let's not count just distribution days. Let's just count sell days in February. 1, sell days above average in February. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, so 11. So 11 of the 1, 2, 3, 4, 5, 6, 7, 11 of the 19 days in the month where the market traded, 19 days. So 11 of the 19 days were down days on heavy volume, and a lot of those down days were pretty heavy. 1%, 2.4%, 1%, 3.7%, 1.7%, 4.15%. The whole point is 4.2%. You don't sell off like this and come above volume average this often if the real smart money isn't selling. So I'm telling you, even though you think stocks are too low to go any lower, the way my shorts look and the way we keep getting new shorts and the way the very few longs that we have do work, but we have nothing new showing up, tells me that the right side is the short side, and that will continue to work. NASDAQ down 53% during the top. We have gains during this time, folks, just to let you know, those of you that are watching this and do not subscribe to the site. We have gains while the market's down 53% to 58%, the majority of us. Those that don't are normally newer investors. Let's look at oil today. Oil's at 43. Like I said, between that 35-50 area where it wants to dance, if it gets over 50, with the way this economy's acting, all I got to say is, uh-oh, stagflation. Could it be possible? I don't know. But look at platinum. Platinum looks bullish as can be. Up another 1.53% today. Closed lower than where, or actually closed higher than from where it opened. Let's go all the way out so you can see that. Shows you the bullish session with a bullish tail. Now let's look at silver. Silver had a 2.4% rise today. Bounced nicely right before it hit the 50-day moving average. And as it pulled down the 50-day moving average, it did it in a nice round cup-like fashion with bullish tails near the bottom. Beautiful looking pattern on silver, and another bullish intraday, open at 13.12, close at 13.23. Not much more I can ask for. Gold, the powerhouse it is, up 2.88%. Bounced right off the 50-day moving average yesterday, and that's where I told you if you're going to go long gold, buy it. Now is where you would do it, right here when it's at 906, where the intraday 900 barely kissed the 50-day moving average. But now it bounced off at 2.88%, so now you can only make a little smaller buy because the 50-day moving average is where you want to get it whenever you're already long. But gold is looking good, and to even prove that, let's look at GTU, the Central Gold Trust Ordinaries, which basically is more about the mining sector. So if you want to know where the bulls are, I guess you got to look at gold with the way it looks. It looks beautiful. GTU, GLD, which I am long, I will disclose. Well, I don't know what Telechart's doing, so let me go ahead and just wrap it up there because it looks like I'm over the time anyway, and actually I do see what's happening. There we go. Now we go. There's gold GLD right there. It was zone alarm updating. GLD bounced off the 50-day moving average on strong volume. My only problem is volume was lower than the downtrend still. Gold futures and actual hard bullion gold, 10 troy ounce bars or 1 ounce gold coins is what I would prefer you to be long anyway for safety. But GLD is at least backed by gold. But you saw GTU, and I would look towards gold as about the only bullish place to park your money right now. However, some stocks are extended, some don't look good. You're going to have to learn to time them, and let's just subscribe, and then I can tell you when to go long and what we are already long. Anyway, I'm going to wrap this up here. Part 2 is next for everyone. Aloha.